In this blog post, I talk about hidden tax traps and inherited IRAs. If you inherited an IRA from a parent or relative, you could be sitting on a tax time bomb that might cost you thousands if you don't handle it correctly. Hi, I'm Chris Reddick. As a financial planner, I have helped people navigate these complex rules. I'm going to show you the 3 biggest mistakes people make and how to avoid them. Here's what most people don't realize. The old rules where you could stretch an inherited IRA over your lifetime, these are mostly gone. Now you have just 10 years to empty the account, and here's the kicker. That trips almost everyone up. Whether you need to take the money out every year during those 10 years depends on one critical detail. Was the person who died already taking required minimum distributions, or RMDs, when they passed? If they are already taking RMDs, which starts at age 73, then you must take annual distributions in years 1 through 9 and empty the account by year 10. Miss this, you could face up to a 25% penalty on what you should have taken. But if you died before age, if the decedent died before age 73, you have a complete flexibility. You could take nothing for 9 years and everything in year 10, or spread it out however makes sense for your tax situation. Now here's our 3 strategies I recommend. First, the tax bracket manager. Each year figure out how much you can withdraw without jumping in to the next tax bracket. This works especially well if you have periods of lower income during the year. Second, if you inherited a Roth IRA, use a backloaded approach. Since withdrawals are tax-free from a Roth, let it grow as long as possible, then take it out in later years such as 8, 9, and 10. Third, coordinate with your retirement plans. Use the distributions to max out your IRA contributions, essentially making the money move from a taxable inherited account to your own tax-deferred account or tax-free with a Roth. Look, these rules are incredibly complex and the stakes are very high. I've seen people lose thousands because they didn't understand the RMD requirements, and I've seen others pay more in taxes than necessary. The decision you make in the first few years determines your options for the rest of the 10-year period. If you want to help creating a strategy that's right for your situation, check out my detailed blog, or reach out and we can discuss your specific situations. And if this was helpful, hit subscribe to my monthly newsletter where I break down complex financial rules. Remember, an inherited IRA is an opportunity, not just an obligation. With the right strategy, you can honor what someone left you while keeping more of the money in your pocket. Thank you.